don't make that connections right away, right? We had scientific calculators, and we had ledger paper. It's also QuickBooks, and so I appreciate technology entirely. I've embraced it. I had a mandate out in my business that we would be cutting edge, and that if there was a better way of doing it, we were going to do it. And it helped. I owned a firm called the Tax Trailer. We did taxes for everybody in town, really. I got started many years ago doing accounting for a production company, and so all the OG crew in town, I 1099 everybody. I meet people and I'm like, oh, that's how I know your name. Say you're 1099. So getting to know that industry and the mindset of people, I grew my business a lot out of creatives, right? And then the film folk, notably having, the top filmmaker in town was my client for many years. So I actually did some post-production accounting on a couple films, things like that. But I got all the documentary people. I have a lot to say about the documentary people. You're never gonna make any money, and so there you go. So put it on your credit cards. I have a lot of handouts today, but I want to talk about what you guys want to talk about, right? If you want to talk about tax, we can talk about tax. If you want to talk about entities, if you want to talk about money in general, we can talk about money in general. I will say, how many people have filed their taxes this year? And did you do it yourself, or did you have somebody do it? Okay. One thing I want to point out is, for me, as like tax time is just processing paper. It's not the time to pull your stuff together. Your accounting work should be done during the year. Once it gets to April of 2024, 2023 is in the rearview mirror. I can't do anything about it, right? All the damage is done. So being proactive and getting organized. Are you all sole proprietors in some way here? Anybody W-2? Do you get a W-2? You get 1099?
I get 1099 for one of my.
Right, okay. I get both. You get both. It used to be the film industry. Are you all film? Everybody's? No? What do you
Music.
Music? Okay, same thing.
I have several things. So,
yes, okay. Back in the day, everybody got 1099'd, and then particularly with the unions getting more active, all the California stuff all went to payroll, started putting on payroll. Also, there were incentives for them to do that. They got tax incentives, so that's why a lot of people switched over, and then they had W-2s, which is good and bad. We live in this tax world and the economy where there are two people. There are W-2 employees, and there are sole proprietors, people that own corps, and all that. W-2, you can't do anything with your taxes anymore. You get a W-2, that's it. You live over here in the wild west, you can do a lot of things, right? And depending on how aggressive you want to be. But there's a fundamental inequity in our tax world. So people get scared to be a sole proprietor, own their own corp or whatever. In my Wayback Machine, I worked for somebody else, and I was like, I'm not doing this anymore, and I never did again. Because people will say, what about health insurance? I'm like, well, I pay for my health insurance, right? What about retirement? Well, I fund my own retirement. It's like I have more power over here than I do working for somebody else, and then I can craft a world where my tax is minimal, right? And still pay in, I believe in paying some tax, I just don't wanna pay too much, right? That's the fine line. I have a lot of handouts here, and so if you wanna just do these apart, I have these here. One of the things, and then I also have, I'm gonna do a little worksheet on a tax return and what is it. So, tell me what you wanna talk about. Do you wanna look at a tax return and get a better understanding of it, of what's on there? Cause we can walk through that. Do you wanna talk about entities? And so, since there's not that many of you, let's go here, what do you wanna talk about?
S corps as opposed to LLCs.
Got it. What do you wanna talk about?
This might be a little off topic for the course, but like budgeting for nonprofits is pretty interesting for me.
Okay, all right. And, excuse me, I didn't,
I would like what you said, go over the.
tax return? Okay, all right. Jessica?
I'm good with all of it.
Okay.
I just have a question about W-4.
Okay.
Like, how much to take this year? We only had W-2s for the first time in years and years and years.
Right,
And so there was no choosing,
right.
but we ended up getting way too much back. And so
Yeah.
we need to figure out.
Well, I have to say, well, I'm gonna start with that real quick, this one. So they changed the W-4, way back you used to fill it out and you'd have your marital status and you'd have exemptions, right? And it kinda tied into how much was being taken out, and then they switched it, and it's very, it's based off of your marital status almost exclusively. And then, and so I think the payroll programs, sometimes I think that payroll, I don't think they're up to date. I would check with your employer and say, what do you have for me here? And then, take a look at, well, lesson number 1, okay? If I do nothing else on the planet, this is a 1040. Everybody gets a 1040, right? Fundamentally, this is your tax return. It might be thicker because things feed into it, but it all feeds into here sometime. But take a look here on the second page and look at line 24. Line 24, this is your total tax. That's the number you wanna focus on. Whether you got a refund or whether you owed is like some other detail, cause this is your tax. When somebody says, well, I got more back last year. I don't know, did you pay in more, did you pay in less? It's like, focus on this number, take a look at that number, look at your W-2 stub, year to date, multiply it out and see where you are on hitting that number, okay? And so, but this is always what you wanna focus on, okay? Because paying in or getting, refunds and owing is like, doesn't tell me anything at all, okay? So, there you go, that's what you gotta do, and then you have to, if you have to fill out your W-4 and say you need to withhold $100 more in paycheck or something like that. It's the only way I know how to go about it, because the payroll programs are all over the map and everybody's in the payroll business these days. Everybody. So, okay, so let's talk about entities then, all right? I have an entity thing there. So how do we work in the world? We're working for somebody and maybe we're their employee, right? If we're their employee, that person says, I'm gonna pay you $1,000 and you don't get a check for $1,000, right? You get a check for less. I find very few people understand their paycheck. So look and understand your paycheck. You look on there and you're gonna withhold Social Security and Medicare, right? That's 7.65% of your gross wages. They're gonna withhold some federal tax based on that W-4, maybe some, you know, and then you have other benefits that are being withheld, maybe health insurance, whatever program you've, 401k program and all that, and so that gets you to your net. Your employer takes what they've withheld, and by law, they have so many days to send that over to the federal government, and then they match your Social Security and Medicare. So you paid in some of yours, and then your employer matches it 100% and sends it off.
Is there a state disability insurance here in Texas? Cause I know in California, I had to do that.
For an employer, yes,
Yeah.
yes, the Texas Workforce Commission, it's not disability, it's unemployment. Yeah, not
Oh,
disability, not
really?
disability, yeah. Disability insurance is,
I mean, it's like workers' comp is what, I mean, that's, they don't have that here.
we don't have to have workers' comp, you can have workers' comp,
Really?
it's not mandated here.
Mhm.
Hi.
Interesting.
So you're working for somebody, all that's taken care of you, alright. So let's say you're not, and you are a 1099, right? That means that you've entered into a contract with somebody and you are responsible for your Social Security and your Medicare, right? So you bring in that money as a sole proprietor. I've got these if you wanna pass these out, send that around. This is the Schedule C. So you're gonna have all your income come in and then you get to deduct against that expenses, right? And so if you bring in $10,000 of 1099 money and then you have $4,000 of expenses, you're gonna get taxed on $6,000. You're gonna get taxed on that $6,000 in two ways. You're gonna pay federal tax on that, and then you're going to pay your Social Security and Medicare. It's called self-employment tax. It's Social Security and Medicare. But if you remember that your employer was matching part of it, if you're self-employed, you're matching. So you do basically 15% of your net income is going to go to Social Security and Medicare, right? So you have a little bit of a heavier burden that way on paying your taxes. And then you have your federal as well. So for a lot of people, being self-employed, you're gonna have like, put your finger to the wind, you really need to save 25%, maybe 30 of your earnings, and expect to pay that in tax, okay? So that can get to be daunting at certain income levels, right? So you asked about incorporating. If your self-employment becomes robust, right? And for me, these days, if you are netting, I'll say 60 plus, I'd like it to be 80, netting. That means after expenses, then we might talk about incorporating you. So let's take it aside. There's an LLC, you hear a lot about LLCs, and then there's corps. An LLC is a legal entity only, right? Do I need to be an LLC? I don't know, ask your lawyer. Because are you doing something that you need to have protection from? Everybody everybody's an LLC these days, right? It's like the little Lucy booth was out there in the world giving them out for a nickel. And any lawyer, will advise you to do that. You can take for tax purposes, an LLC is called a disregarded entity, meaning that you are taxed as a sole proprietor. So we're back on our Schedule C, right? Nothing's changed, except for if you did something, somebody sues you, you've got some protection. But we can also take that LLC and we can change that entity and say, I want this to be taxed as a corporation, all right? And then specifically beyond that, I'm asking for that to be taxed as an S corporation. So when you do that, when you move out to being taxed as a corporation, now you've given birth to another entity. A corporation is separate from you, totally separate. It's its own entity. It has its own tax ID number, right? It lives out here. If it's gonna have income, it's gonna have expenses, and it's gonna have its own tax bill. But we can elect for that to be taxed as an S corporation, meaning that this is all coming back to you and all of it flows through to you personally. Does that make any sense at all? So let's say you're an S corporation and there's 2 people in it, and you all bring in $100,000, and you have $20,000 in expenses. Then 80 divided by 2, your 40 is going to go to your tax return, and 40 is going to go to your tax return. That is only taxed at the federal level. So what's missing here? This self-employment tax. So you've automatically saved 15% on your taxes. So in the Wayback Machine, we all incorporated everybody because we're going to save 15%. And the IRS said, hold phone, you're not paying in to your Social Security and Medicare, you have to have a salary, which means that in this corporation, of which you are the owner, you're also an officer, and you need to take an officer's salary, right? So we were like, great. So we all did it. I mean, the entire world is in the accounting community is doing this. So we're like, okay, you got a salary of $12,000. Now I'm evaluating my savings, because I'm paying on $12,000, but we're saving, right? If you weren't, maybe it's like the difference between 80 is net and 12, I'm saving 15% there. So we all played that game. And then the IRS comes around and says it's got to be a reasonable salary, right? And that's the world we live in now. So it's where the creative part, it's where the art of doing this comes into play. Like, I will do it and have a salary that I can defend. One way to do it is to say, if I were going to pay somebody else to do this work for me, this is what I would pay them. Also, it's got to have a little ratio between what you're earning. But now I've got my spreads a little bit tighter, but I still want to be able to save some money, right? So one of the things we're all very aggressive about this, and then one of the things where I backed off a little bit was you've got to be able to sustain this. Because now I got a corporate tax return and a personal tax return. Corporate tax return is going to cost you $1,000 at least, right? Or something. That's all right, you put your eyes up, but I'm already saving you $8,000 in tax. So it's part of that equation, right? So I'm not gonna do it unless in your pocket I've saved you a few $1,000s, then the game's worth playing. Also, over here, if you wanna do it, we called it being in the program, right? Where I had most successful, people was, not only am I gonna set you up as a salary, then we're gonna put a 401k in here, right? And
Right, 'cause then that can't be taxed until
Right,
they draw on it.
right, and
Mhm.
so, if you do that, like as a single person, most of my corps were single people, maybe two, right? We didn't have that many multi-member corps. And then I can maximize that 401k beyond what you could possibly even imagine. I mean, it's like, it'd be, these days, close to $60,000. You can't do that anywhere else, right? As an employee, you can max out what you're having withheld, and your employer's gonna offer a match on that, which, anytime anybody's offering you a program where they're gonna match money, you take it, that's money in your pocket, you always take it. Generally speaking, max out your retirement funding and take any matches you can get, right? But you see over here on the corp now, like, I can take, it's the most powerful thing I can do to lower your taxes. The money's still yours, right? You have it in a retirement fund. It may seem far away, trust me, it's not. Life is freight train, and you end up being my age, right? It's like faster than you can even
24.
imagine. Yes. A full retirement age, okay? Anyway, so that is inside that S corp now. I'm paying you salary. Like, sometimes if I craft it, your net paycheck is gonna be 0. Because I'm gonna take your payroll, I'm gonna withhold what I estimate your federal tax to be, I'm gonna take out some, retirement funding, and so your net paycheck is 0. So you're like, well, what do I live off of then? So the other is called distributions. So you have $100,000 in gross income, I'm paying you $30,000 in salary. So 100 minus 30, 70, you've got $20,000 in expenses. So the net profit on your corp is 50. So coming over to here, if you look on here, on line 1, total, your form would be $30,000, that's the salary. And if you go to, oh Lord, I can't even do the schedules anymore. Number 8 there. So they changed the whole 1040 around a couple years ago. I'm not a fan. But that would be 50. So then your total income is 80 there. On the 50, you're not paying that self-employment tax. And if you come over here to the second page, you will notice that you will have tax, but you won't have line 23. You won't have self-employment
Other
tax.
taxes.
You're gonna pay that when you have your paycheck.
I'm sorry, can you say that one more time?
Yeah,
Otherwise she-
right. So we're at tax time now.
Mhm.
We have your 30 plus your 50.
Mhm.
So it's that $50,000 that we've saved, whatever that is. I can't do anything in my head anymore. So that's $7,500. So, end of the day, bookkeeping and payroll and paying somebody to do your taxes, you save $5,000. That's worth it, isn't it? 5,000, that's no chump change, right? So that's the S corp world, right? Pros and cons. Pros, you have an entity that you can set up and you can work out of, you can run things through there, depending on how aggressive you wanna be. I lived in the wild, wild west a little bit of doing some tax returns. I'm middle of the road now, right? I don't wanna leave anything. I know what they look at, I know what they don't look at. Done thousands of tax returns over the last 25 to 30 years. 5 audits in all those times.
That's good.
On point. They were on point too, meaning something was up, you know, that they look at it. Are there red flags? I don't think there's red flags, right? There's a couple things that don't make sense that like, let's say you have a tax return where you have a lot of deductions on there, right? And you don't have any income. That doesn't make any sense. How'd you pay for it then, right? How do you pay for your expenses? if
Unless you
don't
have
any
another
income?
business. And
Well,
then you
that
can-
all flows through together though,
Yeah.
right?
Yeah,
Yeah,
yeah.
yeah. I mean, and then, how does Donald Trump get by, right? He borrows money from foreign countries and he writes it all off. So he's got cash and he's got losses, right? So I assume his tax return has a big negative on it, cause he's just living off of borrowed money. So, does that make sense, what I've said to y'all? So back on the LLC, do I need to be an LLC? Your first question is, I don't know, do you? Right? I mean, are you doing something risky out there in the world and you need to protect yourself? A lot of people with, professional businesses can get, professional liability and that covers it,
And
right?
product liability.
Right, so, you can get an insurance policy, and you don't need to be an LLC. But you can be an S corp without being an LLC too. And how do you do that? Easy as pie. Do you need a lawyer? Yes and no. The lawyer's gonna charge you $500 plus to do this. You can go on the Secretary of State's website and form an entity, or you can use something called mycorporation.com, and which is now owned by Intuit because they own everything. Anyway, it's $99. You do the basic one, and you can, buy yourself a LLC or incorporate, right? So, and then you pay the Secretary of State fees, which are around $300 something. So probably cost you $500 to do it without an attorney, double that, so. It's easy. You do need to set, in my opinion, and very strong opinions about this, if you're gonna be a corp, then you need to have proper books, okay? Doing bookkeeping these days, bookkeeping is my passion on the planet, because without a solid set of books, all these tax returns are trash, right? Most accountants out there will take the information you give them and they'll do a tax return back. I wouldn't do it, right? I look at the books, send you back home, or I'd say you're gonna pay me to clean these up, right? It's where the truth is. You have a set of books, it needs to be fully reconciled, which means that it's matching to your bank account. It's telling the story of your business, right? So, that's another part of it. Some people are good at it, some people aren't. One of my, things about the film industry and creatives is, there's a big difference between the creative community and me. And creatives live in this space here, right? Now I'm moving all around, all over the place. I'm like this. When I lined up candlesticks on my table, they're like, they're in order, they're symmetrical. They're like, creatives are like doing all these things, which I appreciate, right? but I gotta think like this. So creatives like to make up stories about this world, right? That's what I found out, especially filmmakers, right? They're writing scripts or doing all this stuff, and I'm like, what did you come up with that? You know, and they're like, well, I thought that, or they have a story about this. This world, it's not, you can have some creativity on how you design your world and what you do with it. There's a lot of finagling that can happen. But this is dictated, you know, the IRS has rules and regulations and tax law. They are politically oriented, right? There's this coming from Congress, so a lot of these things are the results of legislation, but it is what it is. And it doesn't make sense. It just is what it is, right? So there's no like, if you wanna find a story and create your own world around this, you know, have at it, but you're gonna be off track, right? You just are. So, that's why, like, looking at these things and trying to understand them is so important, right?
Do you mean like they're creating a story to try to say why they're trying to write something off?
Yeah, or how it should all be. Just how it should all be, right? Like, I should be able to do this, and then like, well, no, you can't do that, so.
Oh, okay.
Yeah, no, I've heard it all, so, and then, if we wanna talk about filmmakers and creating things, it usually is like around getting a film made and who's paying for it, particularly documentaries, right? And what's gonna happen afterwards, right? So, you know, they come in and they wanna talk about all the profit sharing that's gonna come in, cause they're, you know, and I'm just like, so, you know, they've gotten their camera person or whatever to do it for a reduced rate or for free, cause they're gonna get points or whatever.
They all think they're Michael Moore.
Yeah.
Well, it is very, 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 as y'all know, it's very, very difficult to make money in the film industry these days. I'm making a film, especially like the streaming stuff, right? It's, I mean, you can get stuff out there, but they're not paying that much for it, you know, so, if the most successful way to do it is to get somebody to pay you to direct, pay you to write a script, all that. Studio funding, comes in on those big projects, right? But like a smaller, if you're a little smaller, I don't know, you know, even $1 million budget or something, you're better off having somebody pay you to write, direct and all that, and then let them fund it and come up with whatever bottom line they come up with, right? There's exceptions, I mean, there are exceptions, but, I had a couple documentaries that were successful and they were out there and they were showing and there was like, there's no money, right? So, it's hard, it's really hard business, so, but, I'm all over the place, I feel like I'm all over the place. Let's talk about something you wanna talk about.
So what I don't see here, and I don't know, are there anything about trusts, or is that considered
A trust, okay, so people form trusts for the number one reason that you would form a trust, which is again, a separate entity, right?
yeah,
It means that it has its own tax return, it's separate from you or anybody else. And a trust is usually formed because you wanna have control over something. A trust is a result, most typically from an estate, and I will say there's like 1 million kind of trusts out there. I took a continuing ed one time on it, and I thought my eyes were gonna just like roll back in my head, and I was like, oh my god, I don't wanna do this world at all. There's the revocable and irrevocable ones you hear about, and so that's, most typically about setting up your estate for after you pass away. We live in a world where the exemption is still at 11 million, whatever it is, right? So if your assets, if your net worth is below that, you don't really need a trust, right? So it just means like, if you die and you have $5 million, whoever is on your will's gonna get that tax free, right? So, back in the day, I keep calling it the Wayback Machine, but that's where, you know, the limit was like 600,000, you know, back in the 80s or 70s, right? So it's really crept up, and, you know, they always talk about changing that number. That would be a hard fight in Congress
So
right now.
2006, it was, I think, at 4 million.
Right, so still,
Yeah.
if you have, so why would I do a trust? Because, it bypasses probate, right?
Right.
So, meaning like if you pass away, whoever's on your will, they can have they can have access to the trust immediately. It doesn't have to go through the courts. It flows straight through them. So that's an incentive. But if you're below the limit, right, there's no reason to form an estate, I don't think, right? It's overused, I think. And irrevocable can be changed at any time, right? Revocable, or the other way, it's the other way, can't be changed. So the other reason I do it is because I wanna say what's gonna happen to my money and my estate after I die, right? Maybe you have, children, that are below a certain age. Maybe you wanna say you gotta be 21 or 30 before you have this. Maybe you want to have some of it go to charitable contributions, all that. I would watch what you put in one. I don't think real estate should be put in a trust. It's more difficult to get it out. The trust also, if you put your assets in a trust, it has its own tax rate, and they're compressed, right? Meaning that they're taxed at higher rates than your individual rates. In generally speaking, if we get to a corp, you know, before we did the S corp, those corporate tax rates are also compressed. So having things flow through to the individual rates is always preferred, because your individual rates are generally low. And they are low these days, right? They're lower than they've ever been. People complain about it, but they're still lower than they've ever been. But I think a trust is really, really a legal issue, more than it's an estate planning issue, or, you know, there's many reasons. Most common though is because you wanna have beneficiaries, and people are really encouraging them a lot these days, and I'm not really sure why. And they'll say, well, cause I think, you know, what if they change that exemption? Everybody's, you know, if you notice, like, the general way of dealing with the world these days is to panic and think the worst is gonna happen at any time, right? I don't operate that way, and so I live with a lot less anxiety than other people. I don't get alerts on my phone about things, so I live with a lot less anxiety. I think it would be, I think it's something to pay attention to if you thought they were going, if there was actual legislation to do that, but there's not any right now, so I'm not, pre-panicking is,
Well,
you know, so.
If you're not making over, don't have more than $11 million.
Right, well, they're saying that would be lowered, even if it got lowered, oh my god, to get it down to 5 would be a
Well, but,
fight.
and then, I mean, I'm just thinking about the people who are making much more than $11 million who are not paying their fair share, so.
Well, that is very true,
Yeah.
because that's when we get back to the two different worlds, right? So if you set up a bunch of entities and set that up right, you've got a chance of not paying any tax. It's not that hard to do, really isn't. But I think the people, even in that, the top, it's like a fraction of the top 1% that live in that world anyway, so. If you, one of the things that people do is, you know, they wanna give money to their family. You can gift a certain amount every year to your family that is coming out of your estate. It's kind of pre-gifting that. I don't know what the number is, it's 15,000 now or something, they change that every year, but you could do that. So what happens if you did 100,000, right? Like your aunt or your parent or somebody wanted to give you 100,000. Then they have to fill out a gift tax return, okay? And it's not income to you, but they're giving it out of their estate. So let's say that would lower that it go against their exemption. Still, with the 11 million, it doesn't affect that many people, right? So,
So you could pre-give it.
yes, if the gifter fills out, like it's a 706, it's a gift tax return, so, and there's no
And
tax
do they
consequence.
have to, they don't have a tax consequence either?
No,
Oh.
no, it just goes against their estate.
Okay.
That's why Oprah always gave everybody a car.
Well, well,
Is
but
that
Oprah
really-
didn't pay for those cars then,
Yeah,
you know,
yeah,
they're
she
all
probably
promotional,
didn't- she
right?
didn't pay.
Yeah,
Right.
yeah,
I knew that.
yeah, she didn't pay for any of that,
That's called product placement.
yeah.
Right.
So it's kind of one of those practices that's like, it just doesn't, you know, with the way things are structured now, it, you know, it could, but it doesn't right now, it doesn't make a difference. And so, and I will tell you this, there's no matching that up. Like, the IRS can't match that up. If they gifted you that money, send it to you, they can't match that up. So there's things that the IRS can match, there's things they can't match.
But wait a minute, they can't match.
So you file this gift tax return, it goes somebody else, the IRS doesn't have, it's not in your transcripts. If you look online, you're not gonna get, they're not tracking that. They don't even track K-1s to, if you look on your transcript,
Really?
yeah.
That's where like, or you're talking about when the IRS like already knows what you owe and you kind of like tell them, I
They
know this,
know.
and they're like, correct.
Yes, they know W-2s,
Mm-hmm.
they know 1099s, they know 1098, which is your mortgage interest. They know anything in the 1099 land, they know, anything, sales of assets, sales of a house, that's about it,
So
right?
if you fill out that form, what's it, number 7?
The 706, if you do a gift tax return.
Yeah, if you fill out that form, then they're going to know,
They
right?
know that on your side,
But they don't know,
they're not saying you sent it to me. I mean, it has my name on it, but there's not it's not
Yeah.
going in
yeah,
to the
okay,
system
okay,
to cross-reference that.
okay.
Is there a minimum? for the gift?
No,
So if you gave me $100,000, you feel I would send them to you, but there's no way to prove that you gave it to me, basically?
it'd be on the return, you know, that you could prove it. But I'm just saying, in your transcripts, it's not showing up that you've got $100,000, right? And also, you know, that whole thing about the banks are supposed to, if you make a big deposit or
Right.
something like that,
Right.
I've never seen anything come from that. I mean, I suppose they're supposed to do it, but I've never seen anything.
So maybe only if you're audited,
Mm-hmm,
that they'd look at it.
yeah. So, audits. Everybody's scared of them. I will tell you, if you're gonna be scared of an audit, you'd be scared of a sales tax audit, the state of Texas. They're brutal, they go on forever, they will scrape up everything in your life, and, it'll cost you money. That's if you own a business and you charge sales tax.
So if you have, of course, I know this is completely off topic for this, but if you have a business where you sell stuff online
Yes,
and there are different states have different
Yes.
requirements.
Yes.
Cause of this thing, I guess, what
Yes.
was it,
Nexus,
yeah.
yeah.
So how do you justify all of that so that you can, I mean, you can collect the taxes or pay the taxes
Yes,
on it anyway,
yeah,
but how do you do that?
well, two ways.
Uh-huh.
You do it yourself and register with every state you're selling in and pay it, or you pay somebody to do it. There's, what are the names, I've forgotten the names, but there's like, there's a couple companies out there that work with, Intuit, I mean, alright, full disclosure, I was a total QuickBooks Online gal. I was there day one with QuickBooks. I used to go to, the conferences, I talked to the Intuit engineers. It's an amazing program, it's completely powerful, and it costs nothing back to, like, back in the day, the Wayback Machine, when accounting programs, bookkeeping programs cost thousands of dollars, right? And QuickBooks is now, I mean, they raise their fees all the time, but it's still a gift, right? So they integrate all the softwares. If you wanna be anybody and have an app or anything, you wanna be on the Intuit platform and integrate. So there's like, I don't know, there's 2 of them out there, they do it for you,
Okay.
alright? So, cause I wouldn't wanna
So would you
register and
call
file
it
that.
sales tax accounting? Is that
Yes,
what-
yes.
Okay.
Maybe I'll remember what the name of those things are. But anyway, honestly, if you have a QBO account and everything, they have apps, they have a whole thing of all the things that are integrated in there. But, yeah, it's daunting. Because back in the day, if you remember when things started online, they didn't charge sales tax at all, right?
Right.
And so, if you, let's say you're running a business and you're buying your merch online and you don't pay sales tax on it, you have to remit what you should have paid to the comptroller. It's a line on your sales tax return. So, and if you don't, they go through and they ding you and you have to pay it.
Mhm.
So, not worth it. There are also the sales tax, the thing called Nexus, there are states where we have an exchange with them. And so, like, to figure that out yourself would be just, you know, I wouldn't wanna do it. You know, it's tedious and awful, but if you have time and you have the fortitude, you could go register everywhere. I had these people that were like traveling all over the place, and they would go to art fairs, and they were in there Winnebago and such, and I had to do, like registering for sales tax for them in all these places, and I was like, oh, I don't wanna do this, I don't like this, so.
I have a question.
Mm-hmm.
So in the film world,
you know, no matter what you do, you travel to other states and
Yes.
whatnot, do you get charged from your state or the state that you're working in?
In state you're working in,
Okay.
yeah,
Federal,
so,
and
yeah.
that's in the land and stuff.
Okay.
yeah. So now that, like, if you're with a production company,
Mm-hmm.
they're gonna, they'll withhold taxes for where you are.
Mm-hmm.
Note to that, New York, you gotta watch it, cause New York, if you, let's say you're on a shoot and you're in New York for a week, like, your New York, they're gonna, the payroll company's gonna put all your wages on New York. So you've gotta file that New York return and do exactly your wages for New York.
But separate from.
Yeah, you'd have to do a New York return, a non-resident return, but you just, you just gotta watch it, they're gonna try and tax you on your whole wages, right? Even though it wasn't all in New York, so.
It's like what California tries to do.
Yes, if you put your pinky toe in California, you owe tax there. I had, a client that left the country and had her mail forwarded to a friend in California.
Oh, jeez.
That took me 2 years to get to California. I was like, she's not, it's just a mailbox. And it was like, they wanted to tax her. So, very aggressive. California is the most aggressive.
And California has
taxes.
sales tax, I mean, has
Everything.
has every kind of tax.
Yes.
Yeah.
So there's another thing I will say, if you are in business for yourself, particularly if you are a corporation, I make a list, and it's federal, it's state, it's city, it's county, hospital district, whatever, expect a bill from everybody.
If you're a corporation.
If you expect a bill from everybody.
Is that an S corp or
Any
kind
yeah,
of corp?
yeah, just, so, at federal, we pay it here on our tax return.
Mm-hmm.
The state, we pay through sales tax.
Mm-hmm.
We pay through some property taxes. We have a franchise tax here. If you are an LLC or any other entity, you have to report, to the state on a sales tax basis. If your gross receipts are, and I don't have the number this year, it's down, it's $1 million or something less, you don't owe any tax. You don't owe any franchise tax. But if it's above that, then you might owe franchise tax, and it could be daunting. It's a whole nother thing to fill out. And this year they changed it, like, you don't even have to do a no tax due, you have to do a public information report, which discloses who owns the LLC and who's a manager and who's a member. So you need to do that, or your entity is forfeited, and you get this nasty notice. It says, blah, 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 you owe $1,000. Well, you don't owe $1,000, you owe $50 because you filed it late. So, but you get on, you can do it online. There's a magic number in the thing, it starts with an XT, which allows you to do that online. Magic secret number. So, anyway, people freak out, they're like, I've been forfeited. I'm like, well, now you have it, and I go, and get online, and it's fine, right? But it's another piece of paperwork you have to do to maintain your status, because when you form an entity, you form it with the state. It's not formed with the federal government. It's formed with the state, and you're licensed to do business in Texas, and so why do you want to be in Florida or Texas, or why do you want to do that? Anybody know?
There's no.
We don't have income taxes, we don't
Income
state, we don't have
taxes.
individual income taxes.
And that's why again, thinking film, the incentives are way different in Atlanta versus Texas, is because of the state tax.
That is, yes and no, but that's a whole nother thing.
Okay.
That's the whole programs that are giving rebates to filmmakers. And Texas is failing. I think Louisiana has a good one. I'm not so sure New Mexico doesn't. they're hell to collect on. They really run you through the ringer, but that's a whole nother incentive program.
Okay.
That came through lobbying and such, trying to incentivize people to make their films
Gotcha.
in the state of Texas.
Lee,
So.
do you know more on that?
I do. In states like Atlanta, there are tax credits, and in Texas, there's not a
Right.
tax credit because there's not really a pool of state tax to like draw from because
Yeah.
we don't have the, state tax. They were thinking about there are some groups that are trying to get them to pull from franchise tax
Yeah.
and create like a tax credit
Which
that way.
meaningless because you're doubtful that you're gonna owe franchise tax,
Yeah.
right?
The like legislators don't like it, but
Not.
that's like they're trying to be creative about where to pull from. So Texas has a grant that's funded by the Office of the Governor's Grant Program. So it's actually like a line item in the state budget. So this past session we were given $200 million, which is a lot because usually it's like 45 or sometimes less. It's like every 2 years they have to renegotiate that incentives for that pool of money. So it's just a different way of doing it. Like every we have like an incentives map of like who has a cash rebate that's more of like a competitive program like we have, who has a actual tax credit that's like issuing credits to businesses for taxes, and there's just different ways of doing it. There's different ways in between those two ways as well. So
Yeah. And they make you work for it.
yeah, so
They make you work
and then
for
the
it.
tax credit, like basically they just hand over their books and their tax filing, and they can turn it in and verify everything from that. So in the tax credit states, I think it's a little bit easier to get your credit, but like in Texas, you have to turn in all of your books and proof of payment to show it's like a rebate. If you go to like Target and buy a TV and there's a rebate on it, you have to like send in the rebate paperwork, but also prove that you actually purchased it to get that money back. So that's kind of how it works here. And they have to, you have to show that you actually made these purchases and proof. So they have to see like clear checks and bank statements and everything because it's taxpayer funded program. So anyone could come in and say we want proof that they actually spent this on a film in Texas. Has anyone done that? Not that I'm aware of, but they do have to be like kind of open book policy, so it has to be very documented.
She worked for the film commission
Oh,
in
okay.
incentives, that's
All right.
why.
Yeah.
Yeah.
Yeah. It's a lot of work.
Yeah.
Takes a long time. So,
I have a question about
Yes.
kind of moving charitable contributions.
Yes.
I have such a fuzzy awareness of what types of people, like by the end of the year, it's like might as well get this $5,000 kicked off to some charity versus people more middle class who don't really know if they should give $200 to a charity.
Right.
Like what incentives exist?
So there's two answers here. You should give it to a charity because you want to give it to a charity.
Well, yeah, I mean, yeah.
I have to say that first. So charitable contributions go on what's called Schedule A, which is where you itemize. And you all heard that word, itemize. Okay. So you have, this has changed fairly dramatically in the last few years because the decision to itemize is compared to getting a standard deduction. So we're gonna take the whatever's greater. So if you look on here, and if you look on line 12 on your front page, okay? So look at line line 9, which is where we're adding up all of, look at line 11, all of your adjusted income, okay? So that's all your income minus some adjustments that you could have in there, like retirement funding and everything. And then line 12 is your standard deduction or your itemized. That's gonna be whatever is greater. Everybody gets a standard deduction, right? And it's on your filing status, single, married, filing jointly, head of household, whatever. I think the single is 15,700. I've got
It says
Yeah.
13,850.
Yeah, anyway, it's age and all that. Itemizing is where you, your property taxes, your mortgage interest, your charitable contributions, medical kind of, cause it's subject to some limitations, but that's where you add all of that up, right? And if that number exceeds your standard, you get to take that. And so if you look at there, it's gonna go to lower your income, to your taxable income. So if you make robust charitable contributions, they're gonna lower your taxable income,
Okay.
okay? Now, last year, I lose track of time, the year before, they had a little thing where everybody could do like $300 without itemizing, and they took that away. I don't know why they took that away, cause I thought that was a good thing. But like, let's say you're not a homeowner, you know, chances are you're probably not gonna itemize, right? Unless you're just giving like so much away in charitable contributions. So that's where it comes into play,
Okay.
right there. It can lower your your taxable income. Charitable contributions can also go out. You could set up your retirement funds, like your 401k. You can set them up to when you're in this RMD, required minimum distributions. You hear a lot about that, right? So you get to be my age, and I have to take money out of my retirement. So and so I can have my RMDs directed directly to charitable, which means that I'm not getting that taxable income if I want. So that's a tax planning strategy for when you're old and you have a bunch of money. But does that answer your question there?
I think
Yeah,
so, yeah.
yeah. So, most people, if you don't own a home, you generally aren't itemizing. And on that note, there's 3 or 4 years ago, I don't know when it was, 5 years ago, they limited your property tax. So you have all the taxes. You have local sales tax and property tax. It's capped at $10,000, and that was a basic FU to the blue states, really, because that's California and New York and all that. They have really high state taxes, state income taxes, and now you can't deduct them. And you take someplace like Travis County, where people pay a lot of money in property taxes, and they can only deduct 10,000 of them. So
Maybe that's what I've had people from California, like I've talked to them, they go, oh, the property tax is just so high.
right,
And
well, but
I don't know.
they're not paying state income tax. I mean, it's like you're gonna pay it
Well,
somewhere, right?
I have to say, having been a resident of California for many years, I had a house in LA, and my property taxes were ridiculously low, and my income taxes were not that high. They were not proportionately high in comparison.
Right.
So I like that excuse that we don't have to pay state taxes, but the Travis County property taxes are outrageous.
Right.
And the only way I get a deduction is because I'm a senior.
Right. Yeah, they freeze after
And
a while.
you can get a, what is it, a homestead exemption.
yes.
too.
Right. So, what's a workaround on that? Let's talk about you wanna have a workaround. If you have, if that's a rental property, right? 100% of those taxes
It's deductible.
go against your rental income, right? So, there's a way of getting around it, right there. Somehow get
So
those
you could rent the house
properties.
to yourself.
Well,
Or to your
can't do
business.
that,
Yeah.
but, you know, yeah, I mean,
You take a percentage of your house.
yes. So, let's talk about that for a minute.
Yeah, so it's
If
like-
you're gonna own if you are a business owner, I want you to be in a retirement program, but if you're running a business, you're gonna have a sustained business, I want you to own where you're working. And I want you to pay rent. I want you to own it. And your company does not own your real estate, you own your real estate. In general, you always own your real estate. You don't put it in an entity, you put it LLC, you put it in an LLC, that's fine, right? But you own your real estate, and then, so I owned my office building, the company paid me rent. Was another way of me getting money out of the business. So when rental income, like S corp income, is not subject to self-employment tax, right? So it's another way for me to get it out. I can get it out, I can shelter it against my building, which I'm depreciating, I'm writing off all the expenses there. So it's a good way to get money. At the end of the day, you own some property. When you stop working, you have something tangible, right? You have real estate property. So I sold my practice, the new owner paid me rent, I ended up selling them the property a couple years later, but it was separate deal from him buying my practice, right? So I still had the real estate and I was his landlord, so. It's a good, on strategy to go for, that's your, if I'm designing a world for someone, it's like being your own corp, paying your own stuff, going in, owning where you work, having your own 401k. It is a formula for success, it's a formula for building wealth, right?
But just, if you own a home and you rent that home, you said something, I'm trying to remember exactly
Yeah.
how you said it.
Well, it's a little tricky, you're gonna have to be really creative, right?
Right.
But that's a home office, so let's talk about home
I was just gonna
office.
say you could do an office.
So a home office is, if you have dedicated space, it's supposed to be dedicated space to your business, you take the square feet of your house, take the square feet of your office, and then you allocate everything on that percentage, and it's a deduction. And that's a deduction if you're on your Schedule C, a sole proprietor. If you were a corp, just journal it in as some sort of home office kind of thing.
So you can still do that.
Yes,
I
there's,
had a friend who said, you can't do that anymore, my other friend was like, yes, you can.
Yes,
No,
you
I-
can.
I've been doing it for years.
Yeah.
I know,
yeah.
well, but see, he does taxes for his company, so I don't know what he's looking at versus.
Right.
And
Yeah.
he knows I'm an actor, so I'm like, he
Right.
can't do that anymore.
Yeah,
And I'm
you can.
like, I was like, but my friend still does taxes
Yeah.
for it, she said we can't, he was like,
Yeah.
I was like, I don't know.
It's just
Yeah.
substantiated,
Mhm.
like, so you just send yourself a bill, right, that's itemized in that, so, yeah, I do it all the time.
Yeah, it was like 2 years ago he said that, so she's like, I don't know what he's looking at, and I was like, I don't know either. Y'all are the people I'm talking.
It's taking it out for a ride a little bit, but not that far.
So I have
That's
a
what I would
question
say.
too. So let's say, and it doesn't apply to me, but if you're a renter and you can also take some of your rent and
Yes.
use it toward,
Yes,
yeah.
yes,
What if you're
Yes.
a W-2 and you have a home office?
you're screwed.
Okay.
Yeah, that's what I thought.
There used to be a form called 2106 where you got to take a portion of it, and that was also on the Schedule A on an itemized. and they did away with that. I mean, it just gets filtered out, so, yeah.
You didn't finish your set, you're like, if you're a renter, what?
If you are a renter,
Uh-huh.
you know, if you,
You
let's
can
say you
have
have
home
you
office.
rent a house or you
Okay,
rent an
right.
apartment, then a portion of your rent can be deductible for a home office.
It's the
If you
same
have-
formula.
It's the same, if it's,
Okay.
if it's that percentage.
I think that's maybe that's what she was trying to, cause see, I get a W-2 from Universal Studios, from the
Right.
films I do,
Right,
but I'm also like a casting assistant for several offices, so they all give me 1099s.
so you can do
So
it,
I have
you can do
more
a home
1099s
office
than
off
I
of
have
that.
W-2s, right? I mean,
You
they
can
do
do it.
outdo.
you can do a the home office is just gonna go against that 1099 income, it's not gonna do anything about your W-2, right?
And to piggyback off of that, and I'm sorry I came in late and I may have missed this, but for those of us who do work like that, where we're traveling, we get W-2s or 1099s, sometimes in different states,
Mhm.
all
Yes,
over.
Mine's
Right.
Georgia.
I mean, is there a preferred, like, I don't know, way to make yourself a business? Like, is that,
Oh,
is
you
it best to
mean-
do
yes.
like an LLC or an
Yes.
S corp or?
In the film industry, they call it loan outs.
Oh, okay, yeah,
I don't know where that term came from, but you're like, I wanna be a loan out,
Yeah.
and you can, now, depending on the film, they might do it, they might not.
right.
But if you are, I mean, my client base, they were corps, they were all S corps, right? And they would just make that contract with them, right? It's like,
Yeah.
I'm gonna be.
You're
a-
gonna pay my
yes.
business rather
Yes.
than me.
Yes.
Yeah.
You do that when
Okay.
you sign on,
Right,
part of your contract negotiation, and do it that way. Now, you could have somebody who's like, no, we're running payroll on this, I
Right,
mean,
and-
whatever they wanna do,
and
but,
that's okay, right? I mean, they can, you just
yeah, yeah,
receive that as an
Yes.
individual, but then
absolutely.
me as an individual, can I put that money into
They're paying
the
your
S
corp.
corp?
They're paying your corp.
Okay,
That's who it's like it's Deborah Wiley Incorporated they're paying, they're not paying me,
right.
they're paying my corp.
That is so convenient. I go back, cause I have so many different friends, like, you need to be an LLC, and then you have some, no, you should be a corporate,
But what do you know about LLCs now?
That's- but-
Well, we went over that, so what do you know?
that you need to ask your
That it's a disregarded entity, right? Yeah. So that's just like, for tax purposes, an LLC means nothing, for a
Okay.
single member. If you have a 2-member or more LLC, you are automatically a partnership.
And then you have members in the partner.
Yes,
Mhm.
and you're filing another tax return, a 1065. So we're gonna talk about partnerships just for a minute, cause I wanna tell you something that you should listen to. If you wanna be in a partnership with somebody, you're getting married to them. And you're married without the incentives of wanting to keep married, right? There's some slight desire to stay married to somebody, right, to work out those problems. When you're in a partnership, when it goes south in a nasty way. People came into my office and they're like, we wanna be a partnership, and I'm like, nope, you're not doing it, right? And because I don't wanna go through the breakup with you. If you're gonna do that, I think it was on this one here. On starting a business, there's a whole thing of business agreements, and you go over that. You do a prenup with anybody you're gonna go into business with. And the number one question is, the number one thing to talk about is, what if I want out of the partnership? How do I leave, and what money do I get? And so I'm just saying, just walk cautiously. There's a lot of ways to do business without, you can put yourself out to the world as being something. Nobody knows, right, what's behind the curtain, right? My business partner and I were to the front of the world, we're this entity, And behind the thing, I had my own corp, right? She had her corp, right? We were like separate. We were running our own shows. But nobody knew that. They thought we were one business. And then, you know, I was just me after a while, so it was just one business. But my old business partner went through a really rough time, and that's when I bought her out, right? And everything, because like I couldn't have predicted that. Her life fell apart. What would that have done to our partnership, right? So, you know, you wanna protect your own life, you wanna protect yourself. There are successful partnerships out there, but they work at it and they have clear goals and guidelines, right? But I would encourage you to go for it if you can, cause you just have control over your destiny, right? That's what I think. It's something, it's how I lived my life, right? And again, I paid my own health insurance. That's the number one thing. People are like, I'm like, pay for it. What's wrong with you? So it's like, I guess, you know, for me, the idea that anybody was ever gonna do anything for me other than me was very foreign, right? So I don't look to another person to take care of me.
Can we talk about deductions for different
Yes.
types of artists?
Mhm.
I mean, 'cause
Yes.
I know people are like.
Yes. Clothing's not deductible, we don't go to work naked. Stage costumes are, I just wanna put that out there.
So if you buy a suit specifically for example, Michael, since he's a
Right.
musician, if he buys a suit for that
Stage
stage.
costumes, but going out and trying to look like a professional, everybody has the right to look like a slob,
Okay.
right? So, you know, we don't go to work naked, no,
Okay.
it's just not.
However, if you're auditioning for a specific role, would that be considered being on stage?
If you were dressing specifically
Yeah.
for that, yes, right, yeah.
Does that
Right.
kind of lean into interview attire? I mean,
Yeah.
like,
Yeah.
Not interview attire, I mean, that's,
what's the difference? I mean,
I
auditioning,
would think it would
you're
be
going
the
in to
same.
look nice and present yourself. You're not
we're all
going dressed
going
as a
in,
clown for
we
the
all,
audition.
it's for
You're-
you're all, but you also have the right to
Not
look like a
naked.
slob when you go in. I'm
Oh,
just
yeah.
saying it's not, it's just not. And you know, like, one of the things too, if you think about, there's always the straight face, like, response, can you even answer somebody with a straight face on, you know, like, what'd you have this for, right?
Mhm.
Well, they told me that this part was a, you know, business person, so I had to dress like a business person.
Mhm.
Can you say that with a straight face,
Sure,
right?
sure.
So, but it's just one of those things where, you know, it has to, that's a very specific one. I threw that out. Other deductions, generally speaking, I say, if you spent the money to operate your business, generally speaking, it's deductible, right?
So as an actor, like you are your entity, so like it can be a gym membership, it can be
No.
not a gym
No,
membership?
not your membership.
Okay, even
Just
though you're
not.
supposed to,
It's just not,
okay.
it's not.
Oh, that's interesting, cause I remember a few years ago, one of my tax persons was like, you pay for gym memberships, but I don't know, that was like maybe around
It's just not.
15 or whatever, but he did, and I was like, yeah, cause I was so confused, he was like, you're an actor, why aren't you doing deductions? I didn't really learn about deductions till then,
Right,
and he's telling me
right.
you can do this.
A lot of people write off everything. I had, so, you know, the graphic design people, everything I do affects my creativity, everything I'm looking at, you know, and I'm just like, oh, brother, right? It's, you know, it's gotta be reasonable, right?
So going to the
Dependable.
movies,
Absolutely,
okay, makeup and
absolutely.
hair.
Makeup and hair,
What about
Uh,
paying for those subscriptions?
I take them, I do
Okay.
it, research,
That's what I
research and
checked. The
development.
last lady who did, she's like, you
Yeah.
can't do that. I said, every other person says I can because of
If you're
what I
in
do.
if you're in
And
the
she laughed and
industry,
said, haha, if you wanna do it, and I said, I said, I just listened to another webinar not so long ago, so I'm gonna say yes.
Research and
So
stuff.
I said if they call it, you know,
Yeah.
continuing education,
Mhm.
research,
Mhm.
she was like, okay. And my cousin was like, some people don't understand
Right.
certain things, cause he used to do for
Yeah.
like NFL, he does like, he's be in New York,
Right.
but he doesn't have time to help me.
I take all of that. I've taken any, you know, for the industry, if you're in film, right?
Yeah,
you
he's
can
working
do
by
it.
a contest.
Right, right, yeah, yeah, I'll take it.
So what about artists and travel to museums? What would you say about that?
I take it,
Really?
Inspiration, education.
Is it a percentage?
huh?
Is it a percentage?
Or
Or
if
do
you
the
went
whole-
there specifically to do that, if that's your business.
Yeah.
I was told if we have to travel for work and we stop to eat because we're on our way, like it's part of it, like
Yes,
can you deduct those meals?
travel, yeah,
Yeah.
it's 50%,
50%,
yeah,
Similar question, and like in a non-BS way, like
right?
meeting a new professional contact for coffee and lunch and things
It
like
could
that.
be.
Business meal,
Yeah.
right?
I mean, in a
If you want the strict answer on all
Mhm.
those things, you're supposed to keep track of who you had lunch with and what you were doing.
Mhm.
Again, I
So
don't
how
know,
can they
yeah.
tell what you were doing? You know what I mean? Like
Because you have an answer. You
well,
have an
that's what I mean.
answer.
That's what I mean.
Some people,
like-
I have to tell you, every bite of food that goes in their mouth is on their,
On your calendar.
That's
Yes.
literally what one of my he's like, I never go out to eat without it being a business meeting. He goes, every single thing is a business meeting. And I was so young and so scared. I was
right,
like, I don't wanna do, he's like, you're losing money.
right.
I let him do stuff.
But that's
I
also like
didn't-
just bullshit, right?
Right.
I mean, it's like a straight face, right? You can't say, like, every meeting I do, it's like, you don't have a personal life? No, I work all the time. I'm like, okay, whatever. But, it's just, you know, you have to, so first of all, we have just the truth,
Right.
right? We have the absolute truth. You went to lunch, it was for work, you had a client, you had a business associate or something, that's just the truth, right? I went out with somebody, the only thing every meal I go with, somebody wants to talk about taxes with me, I don't write off every meal just cause somebody asked me a tax question, right? But, you know, technically, right, I mean.
Don't you have to have like 15 minutes of conversation or something that's impaired?
I've never
Weird
seen
rule.
that, but,
Okay,
you
cool.
know, I mean, you have to, it's like, it's either, I just get back to it, it's either the truth or it isn't, right? Now, if you want to go and say, take it for a ride, what are you doing? You're risking, right? And it's a measured risk. I don't know, like, first of all, if you're over in that little S corp return world, I've never seen one of those audited. Again, thousands of returns, 5 audits in all those years. So I'm like, audits don't concern me. I want it to be reasonable. I want your tax return to look balanced, right? I don't wanna file an S corp return without you having payroll on there, cause to me, that's like, you know, they now ask on the return, did you pay the officer a salary? I have a workaround for that, but it's, you know, nobody catches it, but, you know, I want it to be reasonable and defendable, right? So you gotta know what you do, it's your tax return too, it's your tax return, right? So you're the one signing it, you're the one sending it off saying this is true, right? What are you willing to live with, right? If somebody asked you about it, would you be able to back it up? Could you sit in a room, which you would never do, you never do your audits yourself, you absolutely have a professional in the room.
Right. I was told if they ever send you something, you never go by yourself. Never respond.
You don't go by yourself.
Right away.
If they visit
go
you, you
together.
put them in a room that's either over air conditioned or overheated, done it.
What, they visit you?
Well, like sales tax is on site,
Oh,
I
okay.
make that uncomfortable for them.
Okay.
Put them in a room, it's not great, not good ventilation, do it all, absolutely.
Yeah, cause one guy, he's like, I
Legionnaires
first got a letter,
going through.
she went up there by herself and then called me and said, he's like, why did she do that? I told you, if you ever get a letter
Yes.
or anything, you come to
To let
us,
somebody,
you don't go up there, and he goes, she got screwed,
right?
she had to pay everything back. And I was like,
So you wanna talk about IRS notices at all? Have you
Sure,
gotten,
sure,
y'all gotten
sure.
them?
As a nonprofit, yeah.
Okay, so IRS notices at the first level are sent out they're computer generated, right? And so they're scary. I've been doing it a long time. I get an IRS piece of mail, I'm like, oh, cause what could this be? And, there's a lot of things that it could be, you have to calm down, you have to look at what it's saying. If you have a preparer, you go to the preparer and let them deal with it, right? Because there's a lot of things that get crossed in the mail. Somebody will call and go, oh, I got it, they say I owe $50,000, and I go, did you sell your house, right? Cause they send out this 1099-S, it's for the gross amount, and unless you report that on your tax return and put it in perspective, you know, they're looking at the gross amount. Same thing, like if you sell stocks, they're going off of the gross proceeds, you're the one who has to tell them what the cost basis was and put it in perspective. So it could be a lot of things, you know, so get somebody to help you. And open them up and keep them. One of the things is people would give me something and it would be like, I'm like, this isn't your first notice, you know, this is your third notice and now you're giving me this, it doesn't have the information on it. First notices, yeah,
Travel,
yes,
automobile.
yes,
So you take a percentage of your travel, of your mileage, isn't that what it is?
Yes.
Mileage and fuel and all, I mean, it's so
Yes.
many miles for
So-
business use.
okay, so autos. Your first choice is to use the mileage deduction.
Uh-huh.
Your mileage is for business use, it's not for commuting, it's not
Right.
going back and forth, it's for business use. And that mileage figure represents gas, wear and tear, depreciation, all the repairs and maintenance.
Mhm.
Like for 2023, it was 65.5 cents a mile, it's very,
Jeez.
it's very robust. If you want to have your vehicle be on your business, like you buy it, and so you have to go, it's called listed property and you allocate so much to your business. So the people that are aggressive are writing off their whole vehicle. Problem is like when you sell that vehicle, now you've depreciated it, now you have to take the gain as an income. So there's, you know, like, anyway, but then you get to write off all your actual, and you get a big depreciation deduction, so.
And what about leasing? If you lease a vehicle, you can deduct, you still
A
deduct
percentage
percentage.
for business use. Again, it's kinda like listed property, so you have to say that. Most people, like, you know, people do it all, they write off all their vehicles all the time, so
So
mileage is better.
for commuting, let's say again as an actor, now every audition's on tape, so it's
Right.
not really the same.
Right.
But if there was an audition in Dallas, you could do that mileage, right? Or does that count as commuting?
That's an interesting one.
yeah, cause I mean, they're still mostly online, but we have had some in person in
Right.
the last few years, like
Can you
random.
go
I
from
would
your
take
office?
that, as business mileage, cause it's not an office, you're going there specifically for something. It's just like going from your home to your workplace is not, that's commuting.
Okay.
Cause I had an in-person audition like 2 months ago,
Oh,
I tracked
yay.
it, because I was like, well, it doesn't happen that often,
Right,
right, so
right.
I'm trying to do it.
And you know, there's apps for this, right?
Right,
yeah.
Right, there's
So-
apps, there's an app for everything, it's the better way to do it.
Mhm.
People make up that figure all the time.
And going back to a musician, if they're going to a gig, does that count?
I would call that commuting in my
Okay.
mind, you know.
The only time I used to count it is when I went from the business, like I was
To the
at the
place.
Yes,
theater and then I
yes.
had to teach.
Yes,
And then I'd go back to the
Yes,
theater and I
yes.
count all that.
yes, correct.
Wait, but going
Correct.
from your home to like
Your workplace,
wherever you're
That's-
performing is not considered.
that's the definition of commuting.
Even if it's a gig in San Antonio.
Yeah, I mean, community's community, it could be next door, right?
I was like, but you know, as artists, we don't perform every day. It's like not
Right.
Monday through Friday. So that's
Right.
why I was like, isn't there a little gray there? Because
There's
If it was like-
absolute gray there.
I was like, if I worked in an office Monday through Friday, okay, that's just regular commuting. I'm not acting or singing.
It's just
or-
definitions
And if
of
you're going for
workplace.
classes or whatever, that's
Right.
still, that's a business expense.
Yes,
Right.
yeah,
Not just
Yeah.
not just the expense of the,
Right.
yeah,
No, I do those, but I was just,
Yeah.
he just made a specific
yeah, no, I
thing. So I was
got it.
thinking like,
yeah,
I was told I could count those because it's not.
yeah, it's just the definition of your workplace,
Mhm.
right? So, not everybody works in an office.
Right.
And if your job
Yes,
is paying you per diem or
Yes.
mileage,
right,
then
can't
you,
deduct it, no.
you can't deduct it because you're being paid.
Yes, right,
that,
yeah,
okay.
you don't have an out of pocket.
Right.
Yeah.
Oh,
Yeah.
they track that. I've never been paid for DM, so I don't know.
Don't look at me.
No, no,
Married
no, I know.
anymore.
If you're per diem, like sometimes they break it out and say, okay, there's mileage, there's
Mhm.
housing, and then
Right.
you just have your
Right,
per diem.
right.
And per diem covers
So let's
meals.
talk about
Right,
that.
so it's not just meals.
That is an option on your tax return.
Mhm.
If you do not get reimbursed, and you're traveling, you can do per diem rates. And they're all in the tax program, so you keep track of like how many days you're at someplace, and every city has their own, there's high, low, and every city has their rates, but you can take a per diem instead of actual, if you didn't have your expenses.
Mhm.
Or like, if you wanna you're staying with a friend or something, so you didn't have a hotel, but you could take that per diem on your tax returns. So, and there's one for meals, and then there's one, meals and incidentals, and then there's one for lodging. Those are the two
Okay.
that you can do.
So nowadays, you probably know this, but like all of that is in an actor's check. What happens with them like buying the stuff when they're there? Does it still count?
So you're saying they're getting compensated for it, right? Well, then all the more reason to take the expense,
Okay.
right? Cause you've
Mhm.
got income that's really a reimbursement.
Right.
So you don't wanna get that expense on there.
Okay.
Right, yeah, yeah.
Are you saying in our payout, it was like a per diem?
Yeah,
after the
sometimes
payment?
on the check, like you'll see that
Mhm.
they'll pay per diem on the check, which is like
Oh.
counterintuitive to what
Right,
per diem means.
but you wanna take that regardless, yeah.
so write down whatever your expenses are.
And the per diem rates are pretty good, right? I don't know, well, they are, except for like hotels, rooms are really expensive these days, right?
Mhm.
So they don't get that high,
Mhm.
they don't,
So what about, again, going back to travel and research, like, I don't think I can do it because of what I do, but like, I know I can do cable and all that stuff, but like,
right?
as far as like traveling, if somebody goes to France and
Right.
wanna like,
Right.
can they write that off?
Well,
Because
the
they're,
question you would be asked, I mean, that we have to go into our little pretend world that you're getting asked about it, right?
Right.
And that would be, you'd have to go into how much is personal time there
Mhm.
and how much is business time there,
Okay.
and you allocate that out,
Gotcha.
right?
So just, this is a bad example,
Does
but I'm
anybody
gonna say
do
it.
that? No.
But like, so right now, one of my shows, Guilty Pleasures, is Fixer to Fabulous,
Mm-hmm.
and they're a house renovation show, and they're in Italy.
Yeah, they're
Yes.
very-
So like technically, they are working in Italy, so that travel expense.
Well, yeah, but they're filming a show, it's
Right.
all on the production.
Right,
and
right,
stuff
right,
like
right.
that, So,
Well,
yeah,
okay.
that's a little different,
Yeah.
yeah.
Okay.
Yeah,
It's
but
worth
if
it,
you're
yeah.
over there and you're going and you have some element of work there, then you allocate that out.
Okay.
Yeah, that's what, I did that
For-
last
yeah,
year.
right,
Yeah.
right.
Not to,
Yeah.
but to Spain.
I mean,
You were working in Spain?
Actually, I was, I mean, I was teaching English, but then also, I have another business, a couple of businesses, but one of the other businesses I have is, I make tools for horseshoers, I have them
Oh,
make.
wow.
I used to have a farrier and blacksmith supply in
Oh,
LA.
my God.
And so I contacted a couple of people who bought my tools, and I met up with them and had dinner with them in a couple of different places. And I was able to deduct, you know, my transportation, et cetera, and also have a good time with them, you know,
Right.
and then when I got back, I actually made some sales, so it was worth it to, you know,
Yeah.
to have gone
Yeah.
there. I mean, it didn't pay for my trip, but it
Right.
was, you know, it was part of it. I said to my daughter, it's deductible.
what about like a film festival? If you're going to Cannes or something, can you do?
Absolutely,
Oh,
an
yeah.
entry fee for
Oh,
that,
yes,
not
sure.
bad. Yeah, I mean, that's, film festivals are
Okay.
part of biz,
Yeah.
right? Again, if you have personal, you allocate, you know, your personal time to your business time,
Mm-hmm.
right?
Okay.
And again,
It's
it
a
comes
lot.
back to that's the truth,
Okay.
That's
right?
having fun.
Like,
I'm
we can
still-
always come home to like, this was the truth.
Yeah, and on my
Right?
calendar,
This
I
is why
had
you say
all-
we're here, we live here.
Yes, yes,
And you
yeah,
live here.
yes.
And I knew when you did this what you meant too. I was like, oh yeah, we definitely.
But it's interesting because on my, I made sure that on my calendar, in my phone, I had everything down, you know, whether it was personal or.
You're not typical.
No, but I old, and so, you know,
Right.
I've observed,
Right, right.
you know, other people and what
Right.
they've done, so,
Right.
yeah.
Yeah. Again, that gets back to keeping track of it during the year, cause like, nobody can remember anything, right?
Oh,
And then you try to,
Especially
try
at this
to,
age.
try to recap the year before, so record keeping is, it's just essential to everything.
Yeah.
And it puts you more in charge and it gets you more proactive and less surprises. One of the things I felt so strongly about in my practice was I did tax estimates at the end of the year. And I was more busy at the end of the year. So for me, my goal was to have tax season be a non-event,
Mm-hmm.
right? I just call them and say, hey, I filed your return, right? Didn't have anything to tell, we'd already done it. We'd already done all the tax planning, you know, whether they needed to write a check or not was already determined, right? Takes the drama out of it. It's a drama.
Is the person who bought your business, are they doing the same thing that you're doing? Or is there
They-
anybody who does that?
Yes, yes. It's quite robust over there, I have to say.
Yeah.
But yeah, so part of our business was advisory and bookkeeping, which is ginormous now. And then part of it's tax, right? So they do it
Okay,
all. They
okay.
do everything,
Mhm.
so.
Do you know of anybody that has some, well, besides this class right now, where you just get coached on that, like how to keep your books throughout the year so that when you hand it over in December, you can just be like, cause Helen at Hewitt Jackson taught me over the course of a couple of years what I
Right.
needed to be keeping track of,
Right,
but like, not everybody was Helen
right.
at Hewitt Jackson, so.
It's a hard question for me to answer because, I do, I don't teach, right? I mean, so like, I think bookkeeping should be licensed. I think it should be a degree in licensing.
It is in
Big-
California.
It's, cause it's like, it is the fundamentals of everything and, so I think if you wanna learn how to do it yourself, if somebody said, how do I learn how to do it, I would get you on, QBO and have you take the classes there. They're excellent, right? QuickBooks Online,
Oh,
sorry.
right.
Yeah, and they have a whole, like, you have the Pro Advisor program.
I was just gonna say, there's so
And-
many online versions now. I get emails about it and I kept thinking.
There's only one, no, there is.
Well,
For
yes.
QuickBooks, yeah.
I mean, I
Yeah.
guess I Google sends out those
Right.
online courses, and I think
Right.
QuickBooks is with them.
They own everything. So they have, like, they have 90-something% of the market.
Yeah, cause I have, what is it, Acclivity, which is, Account Edge.
Right? Oh my God, I grew up on NYOB, which became
Which was,
Account
yeah.
Edge. I used it for years.
Oh.
And, yeah, they took that and, made a mess out of it.
Yeah, they did.
It used to be a great program, they
Yeah.
made a mess out of it. You know, that I'm just a total QuickBooks gal, you know, I don't wanna, years and years and years ago, I was like, people call me and say, you know, I'm using Peachtree, and I go, have fun, I'm not doing it.
Do they
So-
have inventory and
Yes.
invoicing? They do?
Yes.
I
They have
all of it,
everything.
Yeah, I have
There's
I
it.
guess
and
I'll-
everything,
Yeah.
yeah, inventory's hard,
Oh,
you know, I mean, but, I mean, you see,
Yeah.
like, you know, the inventory.
if I can do Account Edge, I can probably do QuickBooks.
Yes, oh my God, yeah, and it's just knowing how to use the software, right? It's like, you know, people mess it up. I would say one thing, the person that's qualified to do your books is not your sister-in-law who's out of work. That's not that's not a certification,
Unless she's a former bookkeeper.
right? I mean, I'm just saying that, like, just
She
people
doesn't
would
have a
be,
record.
like, well, my wife or they're not, you know, they're gonna do it, and I'm like, great. So, and I'm gonna charge you twice as much to clean it up,
Yeah.
that's what I would say, cause I don't like cleanup, you know, it's horrible, so, yeah.
Okay, you're kind of answering my question
Yes.
right now, but I was, you know, thinking like, as a bare minimum, like if we have QuickBooks Online and we're entering our expenses.
You're not entering anything, it's being fed in from.
Oh,
yes.
it's from, okay,
Yes.
so
Yes,
it's from
link
that,
in.
okay, well that's
Link in.
even easier, right?
Rule 1, alright, separate your personal and your business.
Yes.
It's called intermingling,
No.
don't do it. Everybody intermingles.
Yeah,
If you have a separate
Mea-
account,
mea
separate
culpa.
business account,
A separate, like,
A-
business
a
account,
bank
bank
account,
account, everything.
and a card. You pick
Okay.
a card, you don't have to get a card, it's registered to your business, you have
Mhm.
one credit card. When I get my wallet out and I pull out a card, I've automatically organized, cause I've already said this is business,
Mhm.
it's not personal.
Okay,
And so that feeds into
Mhm.
my QuickBooks, and I've captured everything, right?
So when you open up a bank account for your business, does
Yes.
it need to be a registered business
Uh,
account?
It kinda does, like it's at the bank, that gets into
Yeah.
banking.
I'm
Um,
like, or are you saying me as like, I'm not an LLC,
You're just,
I'm not
yeah,
an
you're
S
just
corp,
you on the planet.
right?
You could just have a separate bank account.
And I'm like,
and
this
you-
is I'm gonna use just for
yes,
acting.
but you don't tell them it's a business account.
That's what I'm looking
Yes,
at.
right, a business account is if you have a different entity, right, it has a different tax ID number,
For a DBA, right?
right.
so just a dedicated
Yes, a
card and
DBA.
account.
Okay.
Totally, cause DBA is just doing
Doing
business
business
as,
as.
and so somebody can't write you a check. And you know, like if you know, if I'm a tax trailer, I had to have a DBA, right, so they could write me a check that said tax trailer. People don't
Yeah.
write checks anymore, but anyway, but, yeah,
So if you're doing that, so
Yes.
everything's dedicated,
Yes.
and you're
yes,
reconciling your
Yes.
account with your,
Yeah.
you know, what
yes,
you're seeing in
Yes.
QuickBooks
yep,
versus what you see in the bank,
Yes.
check,
yes,
then are you in a good
you're great,
shape?
yeah.
Like just
Yeah.
doing that?
Yeah.
Like, okay.
Big tip, when you take, when you accept a transaction over, you categorize it.
Mm-hmm.
It's the one on the left, the transfer, you never transfer. I don't know why they have that in there,
Oh.
drives me crazy.
Yeah, I have Quicken for
Yes,
my.
right, well, listen, Quicken used to be a great program and they messed that one up, right? Like it was so simple, I'm like, I want Quicken version 1 from 19
They
whatever.
lost deposits and changed categories
Oh,
on me.
really?
I mean,
They made a
I
mess
don't think
out of
I've
it.
balanced that, I mean,
Yeah.
I balanced it according to
You
the,
can use Mint now, but you can't get out of Mint. once
No,
you get
well,
into
Mint
Mint,
closed down now.
did they should, I
I
think
love
I,
YNAB. I love YNAB.
yeah,
What is it?
You need a budget, it's YNAB,
yeah,
and it has everything, and you can do multiple accounts, so you can have your business account and your
Yeah.
personal in the same.
you wanna talk about budgeting?
Sure.
Sure.
I'm
let's do
for
it.
Do you?
Yeah.
If people come to me and they want a personal budget, I'm like, I'm not doing it. I will tell you, it doesn't change anybody's behavior one bit. Your money habits are baked in, you're gonna have to really work to change them, right? If you wanna add things up to find out what you're doing and it changes your behavior, I mean, one of the things we all need to do is to check our subscriptions, right? 'Cause you,
Isn't there, what's it called, pocket money or
yeah,
rocket money?
that will go in and find them for you,
Yeah.
like, and all that.
Mint was
I-
doing it too, but
Yeah,
Credit Karma just bought Mint, so they merged, so if you
Yeah.
buy Credit Karma, as of last week, it shut down.
but
I mean,
your,
Mint. it
your
shut down.
behavior on what you're doing is, extremely hard to change, right?
But if you see it, you're more likely, at least you know what your
Maybe.
behaviors are.
Maybe, I just saying, as like, it's a hard nut.
Oh, yeah.
You've
it-
got
it
other
helps
work
us.
to do,
Mhm.
you've got other work to do.
Oh, yeah.
If you wanna really look at your money. And I talk to people about money all the time, right? Here's what I would say, money's just money, right? It's a thing, it doesn't feel, it doesn't have emotions, it's not, it's like take away all that stuff, like the Christmas tree decorations off of it, and look at it for what it is, right? And I know that sounds, it's just you're better off if you can get your emotions away from it. Your self-worth of who you are, where you are on the planet, and such, it's not helping you, right? It's not helping you to feel about it. That's it.
At the same time, going from somebody who did work and changed it, it was really nice to see that happened.
Right?
And then it took away the guilt when you did. It's like, oh, I have $20 that I can spend on this and not feel
Right.
bad about it.
Right.
So that it did help with the feelings, but you had to take the feelings away first.
Yeah,
And then you're like, oh, actually, I'm doing okay.
yeah. Well, let's take guilt out of it. Let's take guilt out of everything.
Yeah.
And so, one of the things that if I'm giving advice out on how to, I call it taking care of your business first, right? You pay your bills, you pay your taxes, you take care of all this stuff, and you have it all baked in, right? Maybe automatic, right? Automatic saving some money, automatic paying for my taxes, and then what's left over is yours, right? So you don't have, you've already taken care of your business. Problem is people front load that other stuff, and then they put off what's obligated, right? And so that's the struggle, right? We just flip it out, put your responsibilities first and take care of them, and make them automatic if you can, right? So, it's happening, and you get used to it after a while. You're like, oh, can I pay for X, right? And so, and that gets into debt, right? What we wanna do with debt. If you have a business, managing your debt is number one on there. Debt should leverage something, right? Like people take out debt to buy a house, right? So I'm doing that, but I have equity there, I'm building something. I'm doing a film and I don't have any money, I'm gonna put it all on my credit card, right? And then when I sell that film, I'm gonna pay off my credit card. Well, that's great if you know you've got like maybe somebody's funding it and they're, you're gonna get it paid off. But at the end of the day, if you just end up with that credit card bill, what do you have? You don't have, it's like, you got is debt, right? And so, can weigh you down. You just have to, it's hard, everything wants, everybody's offering you money all the time, right? If you own a business and you have a POS system, like restaurants
Mhm.
and shops and all that,
Point of sale.
those people are putting loan money in. This is what happened like with the onset of that, it's like people were putting money in, like the restaurants, and then like Toast, right? Toast is a big one. And so they were like, here's some money and so then they take out of your daily receipts.
Oh, God, yeah.
So
Like
now
3%.
your cash flow is choked and you owe money and you don't have, it's like now you have to borrow more money because you can't cover your operating expenses because your cash flow is like cut off. So it's just,
There was a time certain restaurants, and some may still do it, you would see, we charge 3% for using your debit card, and
Right.
because they could not cover
Right.
the fee.
right.
And now though, there's a class action suit about being charged extra percentages.
You're not allowed to charge for it.
Right.
Yeah, you're not supposed to, you can't
Yeah.
charge.
This is, I
That's
know at one
illegal,
point,
yeah.
I don't know if they lost it,
Illegal.
but I just remember being around like, what? But then, I was in retail for many years, so I knew why they were doing it.
Right.
Is it
You can't charge
nationally
though.
now? Is it nationally?
I don't know the answer,
Because
Texas,
one of
Texas
that-
or
that-
federal, I know you can't do it. In
Yeah.
Texas, you can't charge
I
somebody.
don't know, I'm gonna have to find out if it is in Michigan, 'cause
Yeah.
I charge some of my tool making stuff,
Right,
so that I have miles so I can travel.
right, right.
And they started charging me percentages and I'm going,
I don't think, I don't,
think it's
I
legal.
don't, I think that would be a state law, the way things go, I don't think that's an
Yeah.
IRS thing. So,
Yeah.
and that's, the
Well, it was
IRS
actually-
is who governs the money, so I think it would be a state.
Except that I think that this class action is a national
Right,
thing, so
right.
I'm gonna look
Yeah.
at it, 'cause
That'd be interesting.
I never,
yeah.
I never charge my customers when they,
People do it
bought
all the time.
yeah.
People do it all the time, so. Questions, we're jumping all over the place,
Yeah.
but there's a lot to talk about in the
Yeah.
world of
So
money,
much.
right? And being out there.
Well, thank you, Deb,
This
for
is
this,
great.
Yeah.
Thank
this
you.
was-
Any questions, anybody have any more questions? And congrats for being a budget person.
Yeah.
It took a lot of years.
You're a unicorn, so.
2016,
I will say,
I think
you asked about nonprofit budgeting. So I'm on the board of 2 nonprofits, and trying to do budgets for them is interesting.
Mhm.
One of the challenges, particularly not with this other one, is don't know what the money is coming in, right? So budgeting for that is really hard, and we have to do, but they're going after grant money
Mhm.
all the time, and, it's really hard to do a budget. I can do the expenses, and I can say, here's what we need
Mhm.
to get through the rest of the year, and, I'm trying to get them to have a fund built up, right? So I think the key to a nonprofit is building up a reserve fund,
Sure.
right? So having that, so that you have some room for downtimes and such, but
You're
it's
operating
hard.
operating a lot on projections with a knowledge that these might be pretty chaotic as far as the actual realization.
Absolutely,
And that,
cause you have
that reserve.
you have a fundraiser, you don't know what's coming in, right?
Mhm.
And, unless you're something like Habitat for Humanity that, they can pretty
Right.
much count on, like, the auction items that they have and project that out, right? But if you're applying for grants and such, you get it or not, it's like, it's hard,
Mhm.
it's
And
really
it's
hard.
Also getting the different kinds of grants and whether you get something for operating expenses or for project
Right.
expenses.
Mhm.
Right,
And that's,
Some grants won't award the same group 2 years in a row,
Right.
and some grants will
Right.
disappear. City of Austin Cultural
Mm.
Arts grants.
Oh,
right.
Yeah.
Years of that.
And then reform at completely new conditions.
So the world of nonprofits has just exploded,
Mhm.
right? Just exploded. So there's so much competition
Mhm.
for those dollars. It's just hard. It's just hard. You have to keep working it. There's no rest.
I have one word to say, or two words, family foundations.
Mhm.
There's a
Contact,
foundations library connected to UT,
yeah,
and if you talk to the lady in the foundations library, she is a genius. And she can find you the things that you need. I visited there once and was like, what? How did I not know this place
Like
existed?
scholarships, right?
she
There's
has
a ton of
everything.
scholarships out there for people, right? You just gotta go find them.
yeah.
Such, and
And
there
like
is money. You're
Super
right, it's private
specific
money.
foundations that only give to music, that come from Spain, that has to do with guitars, and like she
Right.
can find that stuff.
That's cool.
Yeah, I mean, I was in LA
Mhm.
and I was an arts education director for a theater company, and I had developed a program to go into shelters, women's shelters. And I was out here visiting my daughter, going to UT, and I met somebody who had a family foundation. I got $100,000 grant.
Mhm.
I mean, just bam, and it was, and they came out for a site visit, and it was, I mean, it was the easiest thing I've ever done.
Mhm.
You
Cause
know.
they can do whatever they want.
They can do whatever they
They can
want,
do
and they're a
whatever
family
they
foundation,
want.
and they liked the idea that it was for women who were, you
Oh,
know,
yeah.
Right.
trauma survivors, and yeah, they just went for it. Magic. And the development person that we had just sat there going.
Isn't that why the oldest people?
So the difference between, so y'all on crowdfunding, crowdfunding for business is not optimal, right? I mean, you know why? I mean, it's like, if I give money to crowdfunding, I can't deduct that, and then it's income to you, right?
Right.
So it's like, it's not a great way to, I think it's good if you need a kidney or something like that. but-
So is product placement, like, cause I'm thinking about people who are making films, product
Right.
placement, that's in exchange for money,
Yes.
and
Yes.
that's deductible still, right? Or is it?
Oh, you mean like,
Like, so let's say
that's
you,
usually a money exchange.
Yeah,
Product
yeah,
placement's usually
yeah,
a money
yeah.
exchange, so, yeah, if you're doing it for advertising or such, then it's like, like that,
well, it's not deductible, it's considered income then, right?
right,
Against your
Yes.
expenses of producing
Yes,
the film or whatever.
exactly.
the
If
play.
there's an expense, there's income, right?
Yeah,
So whatever happens, or you want your number one accounting lesson on the planet, whatever happens in two places. It's called double entry. And you talk about things being balanced, that's why debits and credits have gotta equal. So if I go and I go buy a computer, my equipment expense went up and my cash went down. If I send you an invoice, my income went up and my receivables went up. And you pay me, my receivables go down and my cash goes up. Whatever happens in two places. And debits and credits will lead you home, so.
E.T.
There's water and donuts, so if you want some, please take some. I know it's late after the fact.
Eat all the donuts out?
Yeah.
Right out